Hey guys, GM, and welcome to The Edge podcast brought to you by Lockin, where we have tough conversations with traders that have seen it all and made it to the top. And today, my guest is actually a really special person, guys. This guy had the first $1 million trade at the age of 20. He runs also a family office with 10 million AUM. 2022, 1 billion annual trading volume. So I'm pretty sure right now it's way more. But I'm gonna stop here. How you doing, man? How's life?
Good, man. That's my quant. I'm doing great. Markets could be better, right? But doing great.
How did you get into trading? Why trading?
I think I got into trading because, when I was at the uni, it was kind of the myth of becoming a trader, making it. And actually, it was quite interesting because with crypto, you could access some kind of quite advanced trading terminal, like Coinbase. We had GDAX before. You had another book, so it was quite interesting. And I was doing math, mainly studying math. So I think it was kind of the natural rabbit hole for me of doing tech, so crypto at the beginning, and then more trading because I'm a quant guy, data scientist, AI, and yeah.
So basically, quant trading is your edge. You transformed what you knew in maths into trading.
I think, everybody is kind of like a quant. What I would say what is more a quant is basically instead of being 100% relying on a human, you would rely on building a model. So to build a model, you need data as the input, and the output could be something. So a quant model can be something to take a trade, could be something to hedge a position. It could be quite of anything. But I would say if you want to be profitable in trading, you have to be quant driven. You need to find your edge, what kind of trading you are good at. And then it's how can you build this model to have this consistency, being able to replicate, manage risk the proper way, and then reach profitability, I would say.
Hey, real quick, if you trade crypto or Forex and you keep running into the same set of mistakes, like taking profits too early, moving stop losses all the time, chasing the pump at 3 a.m., I know exactly what you're doing because I've been in the same place. And that's why we built Lockin. Analyze thousands of accounts, over 400 data points per trade, 11 emotional states, every single thing that destroy traders. It's like whoop, bad for traders. Now, if you want to get access to top 7 mistakes that destroy over 90% of accounts, go to lockin.trade and leave your email. That will also put you on a priority access for the Lockin app. Now, let's get back to the podcast. And how did you find your edge? And what is your edge?
So yeah, that's a good question. So actually, I do quite a few things when it comes to trading. We do market making, we do trading purely algorithmic and directional, by manually. So I would say that we build a lot of trading software, that are able to provide liquidity, take direction, hedge, and so on. But my edge, is simple. I think first thing first, the goal in trading is to have some kind of confluence, in terms of what you do. So that's why I always see people doing only order flows, people only doing fundamental. I think, having kind of all, it makes sense, based on the type of trading you want to do. But I would say that these days I'm more focused on purely market making and alpha strategies. So purely trading, as you would see on Twitter. And I would say our edge is now that we are very good at combining quant and AI. And so we are able to process more data, we are able to do more research, go faster and find more hedges, in the market, and find more alpha that we are able to pocket. But I would say I'm very analytics, I'm very quantitative by nature. So I think that helps you, see the market differently and being able to trade better.
And how do you use these things when working with projects? Because I guess this is really interesting. Where do you find these models? Is it all public data or it's your own data? And then how do you apply strategies?
Yeah, I would say to have a competitive advantage over someone else, in trading, you need to figure out something that people don't see. So either having data nobody has. I think that has been quite the case for crypto since quite some time. A bunch of data were quite easy to get and nobody was looking at them.
Okay.
The second thing is, of course, figure out patterns in the market that do make sense. For example, a pattern that is fairly simple is that Pax Gold and XO, XO is being tokenized now on Binance and Pax Gold, they trade with a pattern. So if you analyze a bit the pattern between those two assets, you can easily build some trading strategies that can be profitable. But then the question is like, what's the scale of it? Can you make $100 a day, 1,000, 10,000? So I would say it's mainly two things, like figure out mainly three things: good data sets, or like data that are quite unique. Then is figure out patterns into those data sets. And third is having the quant way of thinking, and it could be like of building the model of like I have an input, I have an output. I'm able to predict some things or like filter some stuff, or I'm able to have like a very strong risk model on top of my trading strategies. Because if you have an alpha, you have a pattern that for example, like at the opens, you have thanks to your data, you have a good way to predict where, or like to have an idea where XO is going gold. Then is like understanding your alpha, like what's the probability distribution, when do you win, when do you lose, when you win, how much you win, when you lose, how much you lose, and then being consistent with that. And I think this is why machines like algorithms are way better than humans, because like first thing we see, for example, in our community, our trading community that people struggle a lot with is like when they start winning, they increase the size. And when they start losing, they most of the time reduce the size.
Right.
And actually, statistically speaking, you should do the opposite. Because if you have a strategy that is profitable, let's say you have a win rate of, 60% and a risk reward 1.2, 1.3. So you are profitable. But of course, sometimes, statistically speaking, you will have like some drawdowns or like phase where it's harder, and sometimes phase where it's better than it should be. And so of course, when you have phase when it's better than it should be, sometimes you have to scale down the size. And when it's like a bit, you're struggling, you have to trust the models and be like, okay, I have to size more. So that's, I would say, to answer your question, and one of the big mistakes like retail traders are doing.
So would you say even in your community, when you guys provide valid setups, because like I'm in the community, I've seen it, the setups are good and it plays out well over time. So people are given technically a good strategy, but they still fail to execute it and be profitable.
I think it's one of the craziest thing in trading is like you can take 10 people, give them like profitable signals. So let's say even like 100% win rate. Some guys will still lose money. Why? Because they go on Twitter, they see guys doing 10x, 20x, 30x leverage and being like making it in one trade when 99% is like either AI generated or like they did it with $10. Then they want to do the same, right? But like, for example, me, when I see a guy that has like more than 10x leverage when he's sharing a P&L card, I don't even look at it because I know it could make sense, right? If the guy is like sizing very small, he only use leverage, for like managing the margin. But in 99% of the cases, it's wrong, right? And of course, there is a bunch of types of trading. Here you are mentioning one type of trading that people like want to do and like likes, which is like you look at the market, bunch of pairs, and you find out opportunities, and you find out setups where you have like a high expected value of key zones. Could be a resistance, a support, for example, and then you want to iterate on that. But I would say mainly the retail struggles more on risk than on finding an alpha or like being profitable. And I have made a simple experience on that, and I've documented it. I have a public track record on it, audited and so on, where basically I've built an algorithm that opens on FX, opens a position randomly. So you choose like a position, like a ticker between 10 types, like between Euro, USD, USD, JPY, opens like either long or short randomly. So it's purely random. And then the algorithm uses some correlation and some bit of like risk management, of course, like a bit advanced, right? To hedge his risk and like to be profitable. The algorithm is profitable, and I've run it for 6 months and so on. It's not the best one I've done, right? But it shows you how risk management is way more important than the strategy itself. And that's the thing, right? That is so unique in crypto that nobody talks about. And that's why crypto is so hard. Because in crypto, it's very hard to manage a risk. Why? Because everything is either going up, everything is going down. So you can't hedge or you can't, diversify a smooth way in your positions. For example, like if I see a setup in the morning where I have to be long BTC, but in the afternoon I want to be long also, Solana, and then in the night I want to be long, Hyperliquid, then I have the same risk on all. And then Trump do a speech and like it's fairly impossible to manage a risk, right? So yeah.
What do you see like the biggest differences between traditional markets and crypto. Let's speak about this a little bit more, because I guess it's interesting. I think you can learn a lot about traditional markets, learn a lot about trading crypto from trading traditional markets, but also probably there's some things that don't apply.
So I would say the very unique thing in crypto that I still don't understand why it's like that is like we have very little TradeFi principles in crypto. I think it clearly shows that crypto have very little professional traders, professional institutions trading it. Or if they do it like a hidden way, then don't talk about it. They don't document it, right, online. For example, you have some hedge funds, they do some documentations or like some papers, research on like gold, on like equities, but they don't do it in crypto. So of course, some guys are trading it. I have some friends in those hedge funds and they do trade it, just they don't talk about it. And so because they don't share the knowledge, people who study only in crypto struggle to bring like those like TradeFi principles, of like correlation matrices, how to hedge, manage your risk, all this kind of stuff, to really be able to see the market a different way and find more opportunities into it. So I would say that that's the first thing. Second thing, purely on the market itself, crypto is always open 24/7. So of course, it's different. You don't have those gap stuff and everything. And then crypto has a lot of market factors, way more than in TradeFi. And that's, I think, the very hard part of crypto is like crypto, you have Bitcoin, stable coins, then altcoins, let's say. It's hard to find diversification between those altcoins. They all move the same thing, the same way. So it's fairly hard. And all those crypto assets are really a fat tail asset, So these are assets that either, like let's say you buy a crypto, what can happen to you? Either it's slowly going down, so you lose money, or like it's going down faster, so you lose more money if you are just buying spot. Or at some point, it pumps crazy, right? And so it's very, very hard. And I think that's the thing that makes crypto very unique. And yeah, like there is a lot of leverage also. So markets move crazy, especially these days. There is way less liquidity, way less market makers. So we have way more coins that are moving a crazy way that you don't have, in TradeFi. For example, one thing is like retailers always complain about those weak.
Yeah.
I would say people see like pain, I see opportunities, right? I think that's the cool part of crypto is like the more weeks I wish we had more weeks on like SP 500 on like, gold, because these are like, most of the time.
This doesn't happen at all.
Yeah, but these are like opportunities, right? When you have super big week, because you can buy cheap, you have mini reversion, signals and so on. So that are interesting. But I would say the very unique thing in crypto is like how hard it is to identify those market factors, momentum, trend, and how fast they change. And so it's very chaotic, in terms of like, in terms of market, yeah.
Hey, real quick, if you trade crypto or Forex and you keep running into the same set of mistakes, like taking profits too early, moving stop losses all the time, chasing the pump at 3 a.m., I know exactly what you're doing because I've been in the same place. And that's why we built Lock-in. Analyze thousands of accounts, over 400 data points per trade, 11 emotional states, every single thing that destroy traders. It's like whoop, bad for traders. Now, if you want to get access to top 7 mistakes that destroy over 90% of accounts, go to lockin.trade and leave your email. That will also put you on a priority access for the Lock-in app. Now, let's get back to the podcast. So with that being said, since you also know how to trade and you have your own community, what principles do you apply in crypto to navigate through this very hard market at the end of the day?
I would say it depends what's your outcome, Me, I'm bullish crypto, so I want to grow my crypto bags on the crypto that, I think that are relevant at relevant prices, right? And then that's we'll see. And then there is the trading part where I see it more as I have some USDC and I just want to have kind of like a yield on it and like find opportunities if there is, opportunities. And also I want to trade even though the market conditions are hard because I think you always, making some progress, for example, like I think the last 1 month we did a lot of research and a lot of testing on like flows, better understanding flows in crypto. And in the end, that brings you an edge. That's my focus is like trying to grow my crypto bags and then on the second part, becoming a better trader and, having a better understanding of the markets, building some tools for that, figured out some new, I would say, trading strategies. We figured out a few of them, for example, in the last few weeks, thanks to AI mainly. I would say AI has been a killer because basically me, when I had an idea, from an idea to being able to test it a bit, to figure out if it's crap or if there is potential. Before it was like taking me, 100 hours. Now it's taking me like one intern and he spent like few hours on it, right? So we are able to test 10x more strategies. And of course, if you test 10x more strategies, I don't say your profitability grows 10x, unfortunately, but it tends to go in the right direction. But I'm not like crazy trading, like daily doing some setups and so on. I'm more trying to do research, figure out more automated strategies and everything.
So right now you don't really trade that much manually. You mostly leave it to
I
algo?
do. Yeah, I do. I think it's half-half. I do trade a lot, but I would say that, for example, in crypto, there is not much opportunities, so there is not much you can do, right? We are in 20th of April. Prices are going slowly down, but they are already quite down a lot. So, so there is not much volatility, very few squeeze to have some opportunities. So in the end, at some point you can't do much if the market doesn't give you. And to give an idea to people is like, the market now has so little opportunities that probably in 6 months, on a daily basis, I will find 100x more setups, that I want to trade. So at some point you still want to trade, but you're like, okay, perhaps let's be a bit more, and I don't want to trade just to trade also, you still want to have some setups where you're like, the expected value, my win rate, risk reward would make sense.
And having said that, I wanna ask you a little bit more about your personal trading, because I'm curious. What was your first really big win? What did you learn from that win? Did you later lose that money? You were responsible with it?
So I would say I've always tried to meet bigger traders, like guys who really made it through trading and understand, what has been the thing in the story and and so on. And so that's why I'm quite open to every type of trading. Can be news, can be sentimental, purely technical, purely like algorithmic. Because the pattern, and that is like quite unique. I'm in Dubai, and a bunch of the guys that I knew that made it really, really big in trading have different trading styles.
Right.
And still, they made it, right? Because I think trading is quite unique. But what was your question exactly again? It was like...
your biggest wins. What did you learn from them? Did you lose that money?
I would say the truth is like when you trade in crypto, at some point wins come from like a bit of luck and a bit of like you took a bit too much risk than you should have. But once again, here I want to do disclaimer. So everything we are saying is not financial advice, right? Blah blah blah. But people misunderstand that. They think that they should always be risk taker to make it. I would say that in crypto, you have if you want to make it in crypto, you have to be consistent during the whole year, practicing, improving your system, trading. And at some point, there is sometimes, every 1 year, 2 years, on a period of time of like few weeks, few months, where you could time the market a bit more and be a bit more aggressive, Because when the market is, of course, like very bullish, I'm not saying that when the market are like bull run or like bullish, you have to just be degen long. I'm not saying that. That's the mistakes people do. And if you do that, you will lose everything on the downside. When there is a small drawdown. What I say is like if you are profitable in those market conditions, and at some point the markets become better, you have more volatility. The swings are way bigger also, because like a bull market is not only about price going up. It's like more volatility on a daily basis, bigger swings. So your expected value goes up. So your risk reward goes up quite a lot. So that's increase your profitability a lot. And of course, you can be a bit more risk taker because the time makes sense. And I would say that's the recipe to make it super big. Any market is being in the market. Could be gold, could be Euro USD, could be crypto, only Bitcoin. Improving your trading strategies, improving your system, and at some point, feeling a bit, when the market is here, and like being a bit more risk taker. And could be also in DeFi. I have some friends that they only do DeFi. I think it's very hard these days, but at some point, you can do something. And then the learnings, I would say, the part of trading is like, trading is an iteration process. Quant, building an alpha strategy, it's about iterating. If let's say you find a strategy that works in the market, it evolves, with the market. So you will have to tweak some parameters, adapt it a bit, because the market is like something that is moving constantly. And I would say that's the very hard part of trading is like, everything is moving, all those variables, and so you have to adapt to that. For example, let's say you have a strategy that is looking at some breakouts on Bitcoin. And let's say your model already have some parameters regarding the volatility, to scale a bit on volatility. Still, sometimes the market evolves a bit and have more weeks, or like the volatility is changing a bit in terms of like how it is, and you have to tweak a bit the strategy if you want to remain profitable or like fine tune. I would say trading is about being a Formula One. You have to iterate on every race. Sometimes you crash a bit the car. What you just want is like when you crash the car, you limit the damages.
Yeah.
And at some point, if you're like, okay, I feel the opportunity is big and I want to size more and so on, you take your responsibility.
Yeah, I think it's a really valid point because most people they only see the upside, but they don't necessarily protect their downside, right? And that means also that they can't survive on a market long enough for the opportunities to appear.
Exactly, yeah.
So yeah, it's simple but not easy, as they say. And the last question, if you had 60 seconds to give someone, obviously not trading advice, but maybe some suggestions, what would you say?
Just before coming back on yourself to bounce back on what you mentioned.
Okay.
I think you mentioned a key point of like understanding your risk. And that's something, for example, I have a friend, he made it super big on the gold bull run. He was just like an FX guy, trading mainly gold, on a daily basis, And he was profitable. He has like a verified track record, because I'm quite skeptic guy. We did some prop film together. He had some huge payouts and so on. And at some point he was trading gold. We were trading gold together. And because he was starting to explore a bit more the macro, understanding it better, but still a quant way, right? He built quite of like a bullish skew on gold. So what I mean by that, he was like, okay, I feel gold will go up slowly but surely in the next 6 months. It was like 1.5 years ago.
Yeah.
And so of course he changed a bit his trading style, So he changed a bit his risk, shorting, finding like smaller short opportunities, faster ones, and long, and building some long exposure overall, And thanks to that, he made a killer. Why? Because he hasn't been only focused on like his trading strategy, but also exploring other stuff to complexify a bit more his risk and like giving him a bit more, in-depth understanding of his risk, And so you can't say this guy got lucky because he just adapted his risk and actually he made more money taking less risk, knowing that. So everything is about Sharpe ratio. Everything is about expected value. It's how much risk you take for what we want, And you have to understand that sometimes you take bad trades. It's okay. It's part of the game. You had some weird move in crypto these days. I took some trades that were not good. So I risked way too much compared to what I made. But that's okay. That's part of the game. I improve, I iterate, and that's something. So yeah. And what your last question was in 60 seconds?
60-second suggestion, advice for a beginner trader, maybe based on your mistakes that you made in the past.
Yeah, I would say if you're a beginner trader, I would start by finding some demo accounts, fake money. People say don't trade fake, you have to trade real, it's different.
Yeah.
I don't believe into that. I think if you are, you focus, start with that. So don't put your own money. And then you have prop firms that are interesting, for example. And I would say try to explore kind of like a bit of few trading styles, like macro, like purely technical, like a bit of everything, to explore. You can use AI for that, to get some ideas. Watch a bit of content. I think on YouTube now you start to have very high quality content on that. Learn a bit of statistics, a bit of risk management. Statistics, I think, is the hard part of it, right? But it's like a must. And then once you have that, try to, I would say, select a market and focus more onto that market. I see too many retail traders trading everything. At some point, me, for example, I know very well crypto, of course, but outside of crypto, tech stocks, gold, like few FX pairs like your USD, USD, and so on. But for example, I don't know anything about oil. So, it will be harder for me to trade oil, or I will just trade it based on the news. I've tried a bit, but I don't know. Do I have an edge on that? Yeah. I mean, it's just more like to explore. And yeah, I would focus on like one market. Could be like just gold, And do that and figure out what makes sense, for you on that market and testing a bit of things and explore. You have time. I would say for people, they rush too much. They are too much on like, I trade 2 weeks and then I go live and I have two, three, four wins in a row and then I grow my size.
Yeah.
So no, take your time. It can take you weeks, months, years. That's not a big deal. And still work on the side, right? Work on the side. Find a job, to save money. So you are in no rush, yeah. Do that on the side. And of course, if you start trading live and you have some wins, don't grow the size. Never grow the size, Or like put the rules that until you double or triple your capital based on the risk you take, you don't grow your size, Could be the very, very important one. And yeah, and have like a job, invest, compound on trading, and at some point, there is no way you don't make it, I would say. And then I would say for me, if about trading is about like helping you compound faster investments, find like freedom, so you have to understand how much you spend a year.
Yep.
And figure out how can you make it, through trading, and that's it, yeah.
Yeah, I think it's a very valid kind of suggestion because most people, they just rush through things. And yeah, you've been trading for like what, 8 years now, 10 years?
Yeah, 10 years, but the first few years were kind of like exploring, I would say.
Yeah, I mean, it's a lot of time, right? So you can't expect it. Like, there's going to be people that make it after 1 year, but statistically, it's not you.
Yeah. I would say I found some guys like after 1 year, they really master one type of stuff, But then you are always a beginner, when it comes to trading. You can always explore more stuff, learn more stuff to grow your edge, There is so much you have to learn from the market. Exploring like market making quite a lot in the last 2 years helped me understand so many things, that help me now in crypto. So that's why you have to be curious and keep exploring, yeah.
Awesome. Guys, that's my quant. Thank you so much for your time. Thank you,
guys.
Thank you for your time.
Man, thanks for your time. Thanks for the questions. And let's talk, let's check on the side.
Sick.
Yeah. Cheers, man.
Cheers.